Hi there, Serial Trader here. I'd like to do an update on the major US indices, and we'll start off here with the SPX chart. And just looking at the wave count that I've been working here. So it got severely tested there on Friday, only briefly though, and it was just near the beginning of the day. So I'm still liking that we got this initial A down from the all-time high. At this time, I'm calling it an A because I'm still working this as a B wave triangle, but if something changes, it could be a 1 down, but for now we'll work A. Anyway, from that bottom, we still got the A, B, C, D, and now E in place, quite likely there as of Friday. And that's for that B wave. And then we'll be expecting some sort of decline to a new low in the C wave. And just measuring for some targets there. So the length of wave A projected off of the B wave termination point being Friday's high. So the 618 relationship of that for C would get us to 2813, so let's call it around 2800. And the equality relationship would get us down to 2734. And that would technically, so if we made the AC equality relationship, that would be a slightly higher low than we made in the June correction, or sorry, not the June correction, but the lows we made in June. Basically, most of that correction took place in May. But yeah, so that would still allow us to make a slightly higher low to the June lows there, and it would keep the overall uptrend intact, but it would severely test it. Again, we'd have to make a low above here to maintain. So if I go to the daily chart, to maintain this overall uptrend we've been in since that December low, that level has to hold in from June, that 2728.8. So again, if we get to that AC equality relationship measured there, that would give us a slightly, basically a double bottom, slightly higher low. We'll see how it turns out. If it breaks, then we could have something more substantial down. But again, I'm not willing to really embrace that until there's a good reason to. And right now we don't have that. Right now we're just anticipating, another leg down within this fairly measured-looking pullback we've been in. Okay, now back to this hourly chart. So where am I going with this? Okay. Well, I wanted to mention that on Friday. Okay, so the C wave in this triangle thesis here, that was 2931.1, 2939.1 on SPX. We briefly got to 2940.4, so basically ran that by a point, maybe cleaned out all the stops, and then quickly reversed from there, and it looks like we have a pivot in place. So one thing I will mention, on an intraday basis in a triangle pattern, it's not unusual. It's obviously not preferable, but it's not unusual to see just a slight violation of that C wave and then an immediate rejection. That is acceptable. In a perfect world, the E wave won't go above that C extreme, but you know what? We don't live in a perfect world. This is trading in markets, and sometimes a pattern will remain valid despite having just a small violation like that. And one thing that kind of makes me want to look past that very, very minor violation is if I go to the, so this is a chart of the Nasdaq Composite, obviously very similar trend to SPX. And if you look at the Nasdaq Composite, so a little bit of intermarket analysis here, right? Comparing some very correlated indexes in this case. So the Nasdaq Composite looks like we have the same kind of A down, and then we got this triangle A, B, C, D, E, and you can see, for that larger B wave. Now you can see the E wave termination point on Friday on the Nasdaq Composite was cleanly below the C wave termination point. So despite that very slight, 1 point violation on SPX, we did not violate here on the Composite. So that makes me a little more inclined to accept that was just a minor violation on SPX and not to give up on that wave count. So there's that to go off of. But then, okay, well, let's say that's totally wrong, and that violation meant something, and we shouldn't ignore it. Well, this is kind of what I'm thinking in that case. So in that case, there is still a triangle in here, but it needs to be cut up here a little differently. So if this is, now I don't think this is actually the scenario. I'm more inclined to go with the first one. But just to, you know, have an alternate wave count in case, you know, in case the levels from Friday don't hold and we keep going up, well, this is basically, you know, the next most likely scenario from what I can see. So in this case, we still have the A down, but we have this A up, now of a larger B, and then we have an A, B, C, D, E. So triangle B of B, and then we're going up in C of B in a triangle thrust. So if this is the operable interpretation, if this is what's going on, and again, I don't think it is, but I'd like to just throw it out there in case we have an unexpected move above Friday's high. So I'll do some levels here to look at. So of course we got the fib retracement of the overall move down from the all-time high to our low there in August. And okay, so some common retracement levels. We've already had a nice level of activity basically between the 50 and the 618 retracement level. So I'll get rid of, well, I'll leave that up, but I'll get rid of the 382. But what we want to look for here is a bit of a cluster of relationships in case we do go up. And okay, so we'll take the length of A, okay, projected off of the termination point of triangle B, and trying to get an idea for a length for a C of B. And let's throw this up here. So if we go to the equality relationship in this interpretation between A and C off of B, that gets us to 2794.2, which is just below the 786 retracement, around 2983. So those are some levels to look for. If we take out Friday's high, those are the levels to look for as far as possibly trying to reestablish a new bearish position. So at this point, if you have a bearish position on, your stop is Friday's high, and that's at 2940.4. If that gets taken out, even though that this is still probably overall a bearish correction within an overall downward correction, you'd still want to get out of the way of that and maybe look for some higher levels to reestablish a position. Or if you really want to try and, you know, play it on a very short-term basis, that would be a little buy signal. So if, you know, your buy signal activates at 2940-ish, and we're looking up at, I don't know, 2980 or so. I mean, it's a 40-point move. You might want to try and play that on a kind of an intraday basis. I wouldn't personally want to try and play that, but to each their own. Anyway, I just thought I'd point this scenario out in case we do take out Friday's high. This is kind of the interpretation that would kind of allow for that. Again, I don't think this is what's going on. I'm definitely still heavily leaning on this, that we got our triangle B likely in place as of Friday's high. I also very much like that it was the last trading day of the month. You often get important levels, either significant highs or lows, near the end of the month or the beginning of a new month. We've certainly seen that recently here on SPX. It happens in other markets too, but if you remember, I believe it was the end of April, beginning of May, right around that time, you had a major top. You pulled back for the whole month and just made your bottom kind of near the beginning of June. Then you had a major bottom near the beginning of June, and then you trended up in July for a while there. So you do get these pivots, whether they be tops or bottoms, kind of in that it's not an exact timing tool, but it's definitely just it's important to look for those pivots around the end of a month, beginning of a new month. They do tend to happen there quite often. So we got that. We have a complete looking triangle. We have the end of a month, beginning of a new month coming up. So really, it's simple here as far as trade management. If you're short, or if you're looking to get short here on Tuesday coming up, being that Monday's closed for the long weekend, your line in the sand for a bearish trade currently is that 2940.4. Friday's high. As simple as that. Now, I think I've kind of gone through what I'm seeing there on the waves. So let's go to the thinkorswim candlestick chart. And okay, well, first of all, I'll just go through a position I have on right now. So I have some other positions, but these are the most, I guess we'll call them urgent. So I'll go through these. Urgent because they're fairly short to expiration. So I'm long 2 of these SPX put contracts. They expire the 20th September 2019. So 3rd week in September expiration. Let me just check that. Yeah, 3rd Friday in September they expire. And that's the 29.25 strike price. And that's roughly the equivalent of 20 SPY contracts, but in this case, it's 2 SPX contracts. So that's currently what I'm long. I will immediately exit those if we get above Friday's high there. Again, 29.40, 43. So if we get above Friday's high, exit those, possibly look to reestablish another position closer to the 786 retracement, so closer to that 29.80 area or so. But again, currently favoring that we got our high in place and we're going to take a nice dip down here. So that was just throwing it out there, scanning the game. On this platform, this account, long 2 of those SPX September put contracts, 29.25 strike price. So just so you know that. All right, so back to this analysis here. So as far as the candlestick goes, this could be a hanging man candle. And you had a similar candle, well, over here is a decent example, kind of a hanging man. You came down pretty good there, bounced back up, down again. So that marked a reasonable top pivot. Over here we had a similar candle, hanging man style candle, had a nice big down day after that, bounced back up. Now here we are again, kind of at a similar level, basically just below the 50-day simple moving average. That seems to be providing kind of a resistance zone right now, as well as this Fibonacci retracement zone we've been in. So that's all kind of lining up nicely to provide resistance. But again, this candle on Friday looked quite similar, and I'd say it's of the hanging man variety. Potential bearish pivot candle, bearish reversal candle once again. That being said, we are still above the T-line. The 3T line is crossed above the T-line, but in this kind of choppy sideways pattern we've been in, those moving average signals really haven't been doing a whole lot. So I wouldn't put too much weight into that. The T-line tool, it's really meant for kind of a trending environment, providing resistance in a downtrend, supporting an uptrend. In this case, at least for the month of August, there has been no trend. It's been a sideways, choppy price zone here. Volatile, but within a defined range, certainly. Non-trending. Okay, so that's the daily. We'll look at the weekly. And let's see if maybe anything here interesting on the weekly. So on the weekly, up week, slightly closed above the weekly T-line. Not technically a weekly bullish reversal candlestick. So not really a clear signal there on the weekly. Now on the monthly, I think we got something here. I was looking at this before, so let's have a look. Okay, so monthly, I'll point this out here. Monthly on SPX. So for the month of July, we had kind of a doji star reversal candle, and that potentially marked a significant top. And so far, it looks like that did mark a significant top. We were unable to break above that high here in August, and actually we closed down quite nicely. And this looks kind of like a hanging man candle on the monthly as well. So this definitely looks like a bearish candle after a doji star reversal. So the monthly candle certainly implying some potential weakness as well, along with the the wave count and everything else we're seeing here. So keep your eye on this monthly chart. It looks like a potential bearish reversal taking place here. And I think you technically engulf the real body of July with August's candle here. So let's see. So July's candle closed at 29.80.38. August candle opened at 29.80.32. Oh, I see. Yeah. Okay. Well, we just by some fractions of a point, we don't quite have a engulfing candle, but nonetheless, that is still a legitimate potential hanging man reversal candle. So again, so it's basically the same as a bullish hammer, except it's at the top of a range instead of the bottom of a range. So if you get that kind of candlestick at the bottom of a range after kind of a prolonged downward move, that's a potential bullish reversal candle called a bullish hammer. If you get that kind of candlestick at the top of a range after, an uptrending move, that's called a hanging man and potential bearish reversal candlestick. So the same candlestick, but depending on its position, within a trend, kind of denotes the context to give it. Anyway, so we won't go too much farther with that. Just like I pointed out. So yeah, that's SPX. Now we'll go on to the Dow Jones Industrial Average. So the Dow, short-term, somewhat different picture, although very much the same implications. So the Dow looks like we have a nice 5 waves down. Basically, SPX and the Nasdaq made their low before the Dow did. The Dow actually made its low afterwards. And then we've had this kind of 3-wave corrective move up here on the Dow. It's not a triangle. It's taking a different form. It's just, so far, looks like a simple zigzag. Just a 3-wave advance off the bottom. A, B, C up so far. But same message. Possible top in place, looking for another leg down. But unlike the composite, the Nasdaq Composite and the S&P 500, this cannot be counted as a triangle off the lows there. So I just thought I'd point that minor difference out, but directionally it's still aligned for the same resolution down as the other two are. All right, so that's the Dow. We'll look at the weekly candle. Anything there to point out? Not really. Similar to the SPX candle on the weekly. How about the monthly? Have a look at that. And looks like monthly, very similar situation here as well. Doji star reversal in July. And now we have a monthly hanging man as of August close. So that's also still looking or implying some bearishness just using that. All right, so that's the Dow. We'll move on to the Nasdaq Composite. And Nasdaq Composite, so this has actually got the cleanest kind of look for me because we have that nice textbook ABCDE triangle without any violation for that, that C versus E level there, unlike SPX, which had that slight violation. Again, I'm willing to forgive such a minor violation intraday, especially because the Nasdaq didn't do it. So to me, that's enough to give this a chance here for another leg down. So on Friday, it looks like we had a kind of a bearish reversal candlestick there. We certainly bounced off the lows, but also strongly rejected the highs, and obviously closed down for the day here on the Nasdaq. So that kind of looks like a false breakout and rejection to me. And okay, so that's daily. Now let's look at the weekly view here. Anything worth mentioning? Not really. That's just kind of an inside bar. So we have this weekly bearish engulfing candlestick here on the Nasdaq. That's still in effect because we haven't taken out the high of that candlestick. So that's still valid, implying further downside here on that weekly time frame. If we look at the monthly, let's go through this. So on the monthly, what do we got here? Yeah, it looks like similar to the Dow and the S&P. July, we had that doji star reversal. August, we now have this hanging man bearish reversal candlestick. So again, suggesting further downside here. Okay, that's the Nasdaq. Now let's look at the VIX. So the VIX pulled back here, but we still made a higher low here on the VIX compared to down here at, I think the level is 1551. And basically, okay, if we've got a pivot here in VIX, and we have a pivot on the indices, We're obviously expecting another move up in VIX and another move down on the indices. And again, I'll point this out on VIX. So if the indices come down and make a new low, but VIX doesn't make a high above this level here, which was 2481, then we can probably embrace there's a pretty good buying opportunity coming up in the indices if and when they make their lower lows. But if VIX makes a higher high, if we get well above this level here, so let's say we get above 25, roughly speaking on the VIX, and we break the June lows on the indices, well then it's a more substantial downward move that we're witnessing. But again, we'll assess once we get closer to that point, see what's going on. For now, just expecting some sort of move higher in VIX and some sort of move lower on the indices. And, you know, there are some targets, but we'll look at that again here in a second. Now, on the VIX tool, again, this just hasn't been particularly reliable lately because we've just been in the sideways range. Again, this is more of a tool to use in a trending environment to give you, you know, buy and sell signals. Right now, we've just been chopping. You get a buy signal, and then you get a sell signal, and then you get a buy signal, and then you get a sell signal. And there's not, I mean, there's some follow through to the signals, but it's not enough, you know, for a real good swing trade or something. So currently just kind of in a neutral zone here, potentially working another sell signal. And that would be, again, if we could get above the red moving average here on VVIX, which we have not done yet, and get below the blue moving average here on SPX, again, which we have not done yet, although this could happen pretty quickly here, coming up next week and certainly starting Tuesday. Could be some big action after a long weekend, depending what happens over that time period, so we'll have to see. But definitely something to watch here, just in a neutral position currently, looking at this tool. Now, I think that's most of what I wanted to go through, but just to do kind of a summary bottom line here. So yeah, with this position I have here with these two SPX put contracts, I'll exit them. If we do break above Friday's high, I'll close them and possibly look to reestablish a position from higher levels. But currently, this is looking pretty solid to me as far as hanging on to this trade. And I like that we just kind of poked, kind of a classic false breakout. Poke above that previous resistance high, absolutely zero follow through, like barely broke it by a point, and then rejected quite nicely off of there. And certainly that combined with being the end of a month, beginning of a new month, and combined with a very mature looking Elliott wave corrective pattern, I'm certainly liking the downside potential here. And again, if I just you know, zoom out here a little bit just to give an idea, if we do an AC equality relationship here on this next leg down, so from current levels, we closed Friday at 29.26. You're basically looking for almost a 200-point decline down to that equality relationship at 27.34. So that's a pretty nice move to try and catch. Certainly worthwhile trying to do that, I think, in my opinion. And if we just do the 618 relationship, which would be just a marginally lower low, which is certainly possible, that would still get us down to 28.13, almost 2800. So again, you're still looking at well over a 100-point move down, even if you just make a marginal new low before we, you know, potentially bounce up again and start a, you know, potential new uptrend. Again, the possibility of starting you know, a new trending move up remains intact as long as we stay above the June low of 2728.8. If we break that, then you know, we have to start looking at some other more bearish scenarios, at least intermediate term. But you know, I'll evaluate that if and when it happens. For now, we're just looking for, you know, relatively measured move down to either that 618 or equality relationship. So basically between a 100, 200-point move down on SPX from Friday's levels. So we'll have to see what happens here on Tuesday. And I think it's a pretty important week coming up. And it should be interesting. All right, that's probably good for now. Serial Trader signing off.